Welcome to TheoTrade. This is Don Kaufman. Here we are. It is April 4th, 2016. There's just about 2 minutes left to go in the trading day. Stop the presses. There is a down day in the S&Ps. Somebody called Janet Yellen. I didn't know down days were allowed anymore. S&Ps right now down about 8. NASDAQ futures on a percentage basis slightly weaker. That's predominantly on what's going on inside of Facebook, which is down. It's down between, $3.50, $4 throughout the course of the trading session. Apple slightly higher, but again, really a little bit of wreckage inside of Facebook is causing the some of the slippage in the NASDAQ, and kind of a weak day over in the Russell. Now, time out before you got all excited. It's a down day, the day you've been waiting for. You really can't get too excited over here. If I go and I look at the S&P futures, and again, you use the S&P futures as kind of that litmus test for the entire market. Volume, really, really light out there. I mean, this is including overnight trade from Sunday, night into Monday morning. All right, we're not even going to substantiate 1.5 million contracts. And again, we had some light days last week, but again, a down day, very, very light volume. The bonds, okay, not much other than a lot of chop action throughout the course of the session over here. So again, we're not seeing the kind of conviction that we want to be able to see in trade to say like, hey, let's get decisive about markets right now. We're not seeing that yet. Again, the bonds, that just screams chopped out trade over there. Again, the market's just kind of getting dragged down today, just lightly, kind of kicking and screaming. A little bit of action maybe inside of Google, but there aren't too many standouts in equity products other than maybe Facebook. Sure, I can, point out some really small products here or there. That's not going to help you. It's what really drives order flow. And what drives order flow, okay, is going to be the big heavyweights in terms of market cap. Your Facebooks, your Apples, your Googles. Amazon is right there with it. Again, a little bit of weakness out there. I flip around, I take a look at the financials. They're kind of in line with what the S&Ps and NASDAQ are doing inside of today's trade. Obviously, I'm looking at financials a lot, and there's the closing bell. However, you can't read into this too deeply today. One other area that I look at pretty extensively, okay, to kind of get a feel for overall kind of tone of the market, which again, today, this is a light chopped out down move, but to really kind of reinforce my point over here, and I'm just going to close up this left side bar because we are closed on the session. If you take a look at the SPX, there's now, again, there's a Wednesday expiration and the Friday weeklies expiration. And this is something I was pointing out throughout the course of the day inside of our TheoTrade chat room, that if you do take a look at these expirations, they're screaming right now, nothing going on. Okay, you're looking at 10% implied volatility. Now, granted, even this Wednesday, we have FOMC minutes coming out. So it's pricing in nothing around the FOMC minutes. That's a $14 expected move through Wednesday, under a $22 move expected through, again, Friday. It's a 4-day expiration. It's insane low volatility. It doesn't make me feel warm and fuzzy about wanting to, again, sell premium. That's sell premium in the shortest duration. If anything, okay, for those of you that understand this, you may even want to consider buying some gamma, okay? Because what can happen when volatility is this rock bottom? Well, volatility could actually pick up over there. So in the chat room tomorrow morning, we're going to be looking for different ways to be able to buy some gamma out there without having to suffer too much. That is, how can you buy gamma? How can you buy short duration options and not get annihilated by theta, which is your time value that's decaying? One other area that I'll point out today, I happened to put a trade on to none other than the Depot. So I actually executed a trade in Home Depot. So for those of you that do tune in, turn on, it's 32 days out. Okay, we can take a quick glance at the chart over here. As exciting as the chart in Home Depot might be, it does appear like the breakout possibly failed a little bit. So Home Depot received all kinds of upgrades today, shot to 136, kind of failed from there. Hey, it's not necessarily all over, but you have to recognize in just, under 2 weeks of trading, Home Depot has gone from 130, even in the 129 handle though, but from 130 to 136, that's a $6 move, You take a look at the expected moves, and you don't see these kind of moves happening in less than like a month. It happens again in just a few trading days. So we're way outside of an expected move, even the slightest, if you will. Home Depot kind of comes in just a little bit, can make this trade profitable. And I actually used an in-out spread over here. I purchased the 136, 134, purchased the 136, 134 put spread. I bought it in the neighborhood of 89 cents out there. So again, the spread's there. You can see some of the volume, not huge. I only did a couple of contracts over there. We're getting it done. So I'm 32 days out. There's enough liquidity to make it worthwhile. We filled right at the mid price. Decent bearish trade. We're going to hold on here for about 32 days on that in-out spread. Thanks a lot, everybody, for joining us here at TheoTrade. This is Don Kaufman. I will be back on all throughout the course of this week. Also, join us each and every day in the chat room. We're also doing Options 101, kind of the basics and beyond throughout the course of the week in the chat room. Wednesday night, we're actually going to have a big coaching session Wednesday night. Get ready for it. Thanks a lot, everybody. Have a good evening. Bye-bye.